I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week. And hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market gained ground last week, reversing losses from the previous week. Investors were heartened as it appeared that talks with China regarding trade were going to be reopened. At least that's what Secretary Mnuchin said. Help also came from Apple, that had big gains in advance of its iPhone event, and that drove the NASDAQ up pretty sharply on Tuesday, which was the best day for the market of the week. Friday's report, however, on iPhones said that pre-orders for the iPhone X were slower than previous pre-order periods, and Apple then did retreat. The analysts still looking at Apple are talking about prices up around $300. Of course, they're looking at valuation, but Apple does have to continue to perform well in the market to get anywhere near that kind of level. Very notable was the action in the bond market, which continued its recent decline. Interest rates moving up, as the Fed heads were really out talking about the strong U.S. economy, and even making comments that that they would be raising rates. Evans, in fact, he said that their policy would be getting to the point in 2019 of actually being restrictive. That certainly, if that happened, would put caution into the heads of investors. With rates going up this week, even so, which usually would be good for the dollar was weaker. We had warned that the dollar was about to turn weaker, and that really looks like it's happening. And as the dollar weakened, money started to flow into foreign markets. And that gave a pretty good bounce in worldwide markets. And that also helped buoy the U.S. stock market as equity prices around the world began to rise, bouncing off some pretty severe lows. And the first week that they've been able to do that in a while. Our work shows that the correlations that we see in the markets, that with those correlations, the bond market should be bottoming soon. And if that's the case, we should be at a rise in the bond market through the fall. And we think that that should stimulate even more selling in the dollar. Now, that, in our opinion, if the foreign markets have started to move up, and it's because dollars are moving away from the U.S. markets, that should be outflows from the U.S. stock market and should really weigh on U.S. stocks. And if that does happen, and we think that it's a high probability, weaker dollar along with a better bond market, falling interest rates, then that should be a better time for the commodity markets also. So we're looking at commodities, commodity stocks, metals, all of those to have a little better period as we move now in coming weeks, which again we think will equate with a stronger bond market, weaker interest rates, different than what I think the Fed is talking about. We've heard a lot about this Chinese deal coming and read that if the deal did come and they had some trade arrangement, that the stock market would then rally 10% immediately. Actually, we believe if they did come up with a deal would be much better for the commodity market than for the stock market. And the stock market, has had a tendency to price everything in, and we think it's already looking way past anything with China and this trade situation. So our thought really is that markets and investors will start to look towards the midterms and that election, of course, in early November. And that could be the time when the market really accelerates to the downside And I think actually, if the Democrats win the House, I think the stock market will decline more than 10% very quickly. Let's take a look at what happened this week as we look at the 60-minute chart of the S&P 500. And that is right here. Let's get that to come up. And, of course, the gray area is the overnight area. The white area is the pit trading or regular trading hours during the day. And you can see here, way over here on the left side, as Apple started to move up overnight, and bargain hunting came in, this started to get a bit of a rally in the market. And Trump, that came despite the fact that he had ordered suppliers to build phones in the U.S. So, that started to get them weak, and then all of a sudden the market started to turn up again, and that is typically what we have seen. Give any reason for the market to go up, and it will. Just a little dip in here, buyers come in. That's pretty much what we saw. Monday was a choppy day, a little bit lower throughout the day. On Tuesday overnight, China asked the World Trade Organization for sanctions against the U.S. on the trade situation. But then on Tuesday morning, Apple jumps 5% ahead of that iPhone event, and the NDX had its biggest day of the week. And that lifted also the energies, which caught fire for a brief period of time, and a big move up in oil as the hurricane threatened coming into the Carolinas. It ended up to be not as strong as feared. Of course, we expect that it will have pretty significant damage, sadly. On Wednesday was the day that Mnuchin came out and said he's open to new talks with China. It got the market spiked on the upside and then just got choppy for the rest of the day. Apple started to dip. That didn't help the market after the iPhone event. Then on Thursday overnight, China came out and said they're open to new trade talks. The market moved up throughout the overnight session. After that, CPI came out only up 0.2, core up 0.1. That was really mild. And then POTUS came out here. You can see on Thursday, see that red down bar right there? He came out and says, I have no pressure to make a deal with China, and that broke the market for a few minutes, but then buyers came in. Friday, Evans came out and he talked about the economy being really strong, and bonds moved to the downside again. And then we got the news that Manafort pleads guilty and agrees to cooperate with Mueller on the Russian probe. The markets didn't like that, but they got really hit by the report that, well, the president really is ready to put that $200 billion in China tariffs on them, and then we see that big red bar again. So the market here on Friday down a little bit as we're just coming up to a couple hours left in the trading session. And that is a look at what happened during this week. A choppy week as you look at that, but choppy and moving up throughout the week. Stock market for the week, S&P 500 and the NASDAQ close to about 1% up. NASDAQ a little bit better. Dow Jones Industrial Average up about 0.5%. And the Russell just up small, really doing better on Friday. It had been actually about unchanged, down a little for the week until Friday. So Russell really showing some negative relative strength to the rest of the market. The bonds 30-year was up down about 0.75 of a point. The TNX, or the 10-year yields, this is the second week that yields jumped sharply. They were up about 5 basis points, and at one point edged over the 3% area, trading at 299 right now, late on Friday. Gold market, very narrow range, trapped between support and resistance. I will show you that in the short-term view. And oil, which got a lot of help for the from the hurricane threatening the Carolinas and fear about the wells in that area, and also potential for another hurricane that's developing that could threaten the Gulf Coast. That really had bids coming in the oil market, though it was very choppy, and that gained about $1.30 on the week. That is the opening segment. We're gonna the rest of the show, we're gonna get to the best and worst stocks for the week and our short-term view. Here's a brief special message. Whether you're a trader just starting out or you have vast experience, this is for you. Our level 2 membership is our video membership. In there, we have well over 300 videos for really all levels of trading and all aspects of the market that we discuss. We have a special trial right now that you can subscribe for 1 month, unlimited viewing. You watch everything you want, binge watch as much as you want, and that lets you see all 8 categories of our videos. I want you to see as we switch over and look at what these videos are, and you can see Wednesdays. One of our most popular videos is Future Speak. We look at 24 or 25 different futures contracts, 6 different categories of the futures markets, and we do some very deep cycle analysis and teach you a lot of things about analyzing those markets, especially understanding the correlations. So that helps you a ton in your trading. Tools for text. This is amazing. We have 74 videos right in there. Just an incredible broad perspective at so many aspects of charting and how you use these tools in your charting or technical analysis. It really gives you broad application to so many of these chart tools that are here on the Thinkorswim platform and, of course, on most other platforms. Trader Psychology, there are 24 videos in there, and it's based on the fact that for 24 years I have been a trader coach. I've been also a facilitator in personal growth work, and I combine that with trading, and this really touches on all the personal aspects of trading that could be getting in your way. IRAMO, this is the longer term ideas for trading. Stock sectors, I do this a couple times a month where I look at opportunities in special situation groups where there are things going on that, well, I think that give you potential entries into the market. Those markets, or maybe information about the market as a whole. Big picture analysis, these are really about the major markets. We look at the stock market, bond market, the energy market, dollar and foreign currencies, or gold and metals, and really give you a broad perspective of the real big picture. Style, strategy, and plan. Well, that's just what that says. We have 33 videos in there about all different kinds of trading issues, things that come up about the trading style that you have, the strategies you use, or how to, things about the plan that you create. So just a great broad look at ways that you can help your trading. And of course, Market Week in our short-term view, which we do every Friday, and then it goes into the archive, and you can just learn a ton by rewatching those and going back and looking at what we said on each week. There's just so much in there. And our trial subscription we're talking about right now, that includes our very amazing stock index report. So you'll get that every Thursday where if you're not on Thinkorswim and don't get our charts, or you use other platforms, or you're maybe not that active in the markets and don't trade that much, but you want to get a real broad overview of the technical cycle aspects and momentum aspects of the stock indexes, well, this is for you. Comes out every Thursday, and that's included in this special. Everything I just said, all of those things for our first-time members. Over 300 videos, 3 new videos each week, including the stock index report. A 1-month half-price trial, only $18.50. All of that, you could check us all out. If you don't want it to renew, just cancel it, no problem at all. We have just go to our support link on the website and cancel it, and you won't be charged any further. And you can also write to slim@askSlim.com or write to support@askSlim.com, either one, and request that special level 2 membership link for just $18.50. This is just an amazing offer. I really want you to take advantage of this. This is just an incredible way for you to learn so much about the markets. I've been at this for some 44 years right now, so it's just like embedded in my brain, in my soul, and we want to share this all with you at just this amazing price and get you to be part of our askSlim family. So please do send emails to us for that special link that will get you this for $18.50. Thanks for listening. For the best of the week, we look at mostly weekly charts. I'm going to take you through some of the studies that we use since I just mentioned tools for techs. I want you to get a little sense of some of the things that we look at. And the first chart we're going to look at is AMD, Advanced Micro Devices. This has been a monster on the upside. And here is that weekly chart on there with our cycle analysis. So also on here you will see there are some moving averages that we look at on the weekly chart. This one way down here, the blue one, is the 34-week moving average. This is the 13-week moving average, and this is the Hull moving average, which we tend to use as a momentum indicator. And you can see momentum turned up way back over here at $10, and the stock soars to $34 in that period of positive momentum. We also put in buy and sell and resistance zones, support zones, target areas based on fib extensions. So you'll see a lot of that here. This stock ran through all of our targets up here. You can see that. And ends up right now up over 13% on the week. It was up more. And that little bit of a pullback came as we got an intraday reading on Thursday that was on our option bias indicator exceptionally overbought. And so I tweeted that out, and the stock actually pretty instantly backed off. But you could see it still has great gains on the week. The analysts keep raising the targets in here. And we believe a short-term top is in place right now, and that we're likely to get a correction down here to under $30. A long shot you get down here under 27, but I think under $30 is a reasonable pullback target over the next month, and I think that will be a buying opportunity. This stock is really doing well. This company really outperforming Intel, and that's a key for them. Activision, ACTV, is the next one we're going to look at in here. That's not it. The Activision, ATVI. I don't know, I had that symbol wrong, but now you got it right. This is the chart in there with the cycle analysis. It's a great picture of the type of analysis we do. You could see the rhythms in there, cycles being the heartbeat or rhythms in the market. And this got up to that target zone right up over there that was developed from that previous cycle. And a new target zone came up right over here, and you could see it's moving up towards it. We really expect it to get above this $83 number, maybe up to the $86 number, and then probably run into some trouble right there. They moved up ahead of their Call of Duty video game, and we think that once it gets up into this zone and rolls over, it's going to go through another one of these steep corrections into December. So that is a look at ATVI, Activision. Next one we're going to look at in here is Tesla, TSLA. You know, I've been really negative on this one and looking for targets down around the 272 area, and this is a very busy chart. I'm just going to show you this harmonic family that we're looking at right over here. And that really looks to me like it's made that cycle bottom there. Now, our sell zone is up here. That is above the 303 number, maybe even as high as 330. So we think it's going to easily get into that. I'm going to switch over to a daily chart for you to see here. And that is an abandoned baby right over there. And that made that cycle bottom at that point. It's a couple days earlier than the ideal spot. But when you get an abandoned baby near a cycle bottom, that's basically the low. And you could see all these white bars right there. That's because buyers are coming in during the day, every day. So Tesla to us looks like it's made a bottom. As much as I was bearish, and it certainly declined very sharply, and Elon Musk did not help this company or this stock. We believe the downside is now over with. And if you get some dips, we think for active traders, aggressive traders, it would be a buy. The next one we're going to look at is Pandora, and this one the analysts are really seeing improvements in there. Some are saying a long way to go, though. You could see the target zone right up over there, and that would take it above the 1037 area. That's what we're looking for. And notice the uptrends that are established in there. You could see the downtrend and those declining cycles. the base that was built and then the uptrend as that developed. So it's still in the uptrend, moving up towards that target resistance area. We're going to look for it maybe up to about $10.50 or $11 before it stalls out up there, unless some real big corporate event comes. And the next one we're going to look at in the best of the week, or the next two, are in the drilling category. Now, we recently showed the drillers, and we said we thought that they had made a bottom, and then they had this big drop off right there. So let's just get a little closer look, and you could see that it got just below the bottom of that support zone, and then it had this bigger up week as it avoided breaking that low or breaking down. So this still looks good to us, like it has more on the upside, as you could see our projection right there, and as long as oil doesn't go into a collapse, this should be okay. We think oil has got a lot of risk starting, well, not that far off. I'll show you that. This also Noble Corp, the same thing. We'll call them both pretty okay for now, with more room to go. We expect Noble to get up here and test that 682 number, and then we'll see if it can get up to those fibs. It's a possibility up at those levels, so we'll see how good they look. That's the extensions up there, and this one again saved itself, hit that support zone, and then began to move back to the upside. So Rig, Transocean, Noble Corp, NE, both of those up 7 and 5%, and we're going to call them, well, pretty good for now. That is a look at the best stocks for the week. You can see not a lot in there, and I'm going to show you probably less in the worst stocks for the week. All right, for the worst stocks for the week, we're going to start out by looking at CRE. I have 5 stocks to show you in here, which is not very much. 3 of them are going to be banks. So CRE is the first one we look at, and this stock is done. It made a double top. The analysts did not like earnings. Investors did not like earnings, and this is now turned down. That is, you can see that double top that formed right there, and now getting down underneath that significant 34-week moving average right there. Also, I mentioned to you the importance of the Hull moving average, and the Hull moving average has now rolled over there. That's usually an indication of a top. And this happens, now if you look right here, you can see that's about halfway through that cycle there. When you get a breaking close to that last low, right there, with that much time to go, there is a lot of risk in here. So I actually think that this could project all the way down to the bottom of this supports, down over here around under $38. This is a very bad looking chart. You can see that engulfing pattern right there where it made the right side of the double top. The left side of the double top was an evening star. Both of those indications that sellers were at that level. And now this is a bad looking pattern there. So that is a look at CRE, the worst for the week, down about 7%. So you can see no big losers this week, actually. The next 3 stocks I'm going to show you are both in the financial category. Now, I did a video on Thursday where I talk about 4 different groups. 2 groups that I thought had potential to move up, and 2 groups that I thought were risky looking patterns. The one of the groups that I showed was airlines. There's some very interesting patterns in there. I also showed the banks and the brokers, some interestingly poor patterns in there, and then the steels, which I thought were about to bounce, and today's the day that that's actually happening. So you want to go watch that video. Of course, that's in the level 2 membership, so you can watch all of our videos if you, of course, take that special that we're offering. So we're going to switch over now and show you these 3 banks. First one we're going to look at is KeyBank, K-E-Y. Now, there's a lot of reason to believe that this is in a lot of trouble. This is down 6% on the week on analyst downgrades. And you can see that big down bar right over there. Now, again, this is showing you that This period where it's declining is about halfway through here. You can see the XLF is the blue, and then the black one is Key Bank. And this is already nearing that last low right there. That is bad. This says it's going to decline with the XLF, you could see into November or early December, and very bad pattern. I expect this to be a significant breakdown, and this may be a little tip-off for what I think about the banks. Wells Fargo is the next one we're going to look at, WFC. Now this one you can see it hit the sell zone. We put these sell zones on our charts because when we get significant patterns that have measuring anchors, we call them, it allows us to put this in through our swing high, swing low analysis. We have videos on that also, on how to put in these support and resistance zones and when they are sell zones or when they're buy zones. This case you could see it hit that and then move down very sharply. And now you can see, based on the XLF and the WFC dominant patterns, they're way out of phase. Now, that's because Wells Fargo's had a lot of issues, and they ran into problems here where their plan was rejected to resolve problems with auto insurance issues. I think this stock is becoming buyable pretty soon. We're going to call this a few, 2-3 weeks potentially on the downside again, but this is a positive pattern that's forming in there. It's the first positive pattern that we've seen in there in about a year and a half. So we think that the worst, at least for now, is over for this stock. We'll look for just a brief couple of weeks potential risk on the downside, and then we think it's going to be buyable. Northern Trust is the last one I'm going to look at as we take a look in the regionals. Look at all that positive momentum that I highlighted right over there. So that all were positive configurations and cycles, positive configurations or cycles that end above where they began, 1, 2, 3, and 4 in a row, and this one breaking down halfway through. That is giving you a very bad sign and very representative of what we're seeing in the banking sector. So, banks, investors and banks celebrate higher interest rates, and we have the Fed saying there's going to be higher interest rates. However, the bank stocks don't think that it's going to be a good environment for them or their investors, and this is near breakdown. This made a new high as it was supposed to and then turned very weak, and it threatened that key low. That's where we would expect it to get a bounce from. You can see that 34-week moving average in play in there and now breaking below that. We think this is a very bad pattern and likely to have pretty significant downside. And the last one that we're going to show you in the worst for the week is SKX, Skechers. This moves down about 5% on the week. There's a shareholder lawsuit out there, and this is what we consider to be a really bad pattern. This looks like it's got some, we'll call it 3 to 4 weeks of decline ahead of it. You can see where our fib extension target zone is down there below $22. When it made this rally, we said we thought that was not going to hold and roll over. Look at what it did here when it hit that sell zone right there. Oh, is that fantastic? And then rolls over. We're going to look for the next 3 to 4 weeks for downside risk. Maybe it'll hold this support zone again, 22.5 to 24, or maybe it'll break down here closer to that $21 number that we think is more likely. Bad pattern, ugly looking stock, and that is the worst stocks for the week. We're going to be right back with our short-term view for the coming week. All right, short-term view for the coming week. We'll take a look at daily charts in this case. I just showed you almost all weekly charts, and now we're going to switch over to daily charts. We'll start out by looking at energies. We look at energy at light crude, the dollar, the gold market, the bond market, the ZBs, and then, of course, the stock market. We try to be 60-65% accurate, which would make us about 2-to-1 correct. We rate that based on patterns and levels and net for the week, basically those three criteria, and we were about 60 to 65% right on the week. We got light crude, the dollar, and the gold market correct. The bond market was weaker than we expected. It was close to the overall pattern. And we thought, it would be a small change week, slipping down. It was a bigger decline, so we don't get much credit for that. A little bit. S&P 500, we thought it would pull back and then rally and finish down for the week. Well, it pulled back only through early Tuesday. It didn't fall anywhere near as low as we expected, and then rallied more sharply. We're going to take no credit for our analysis on the stock market this last week. Let's take a look at light crude /CL. And we're looking again at the daily charts in here. I put in a fib target zone in there also. Starting to put those in for people that watch us regularly. Let us know if you like those or you think they clutter up the charts. So we're going to keep putting those in intermittently and see what the poll says. All right, so we expected that light crude would move up, test 68.50, and then move down again. Well, there was a roll in here, so the numbers are different. However, the pattern was exactly the same. This decline that you see right there, the amount that it fell, looks like it's turning this cycle down already. So you can see this cycle here, that one right there, and it traded bullishly. It says it would challenge the high or take it out. It did so, but then turned down early. You've got all this time, and that says that we're likely to be a choppy lower week in here. If it breaks this level right over here around 66.94, that's really bad. So we think we're getting into an intermediate negative period and the risks growing to the downside for light crude. Now, momentum is still positive. You can see that green arrow right over there. So as long as it's still positive and it didn't break below this level, it's still going to be okay. But based on the shape of what we're seeing in here, we're going to call it down on the week, chop its way lower. And if momentum turns negative and that level goes, it's going to be a lot of trouble. Next thing we're going to look at is the dollar, DXY. And that pattern right in here, well, you could see it gets into the sell zone and turns over. It's already breaking down. Now you see it just got a little tail under there. It's kind of a false break right there. But this is bad. We're going to call it down week. Momentum in here negative. It turned negative a week and a half ago. And with this big decline in here, it gave us that sell zone and sure enough worked perfectly. We're looking for a down week in the dollar with this negative momentum. We think that this small bounce that we're seeing in here fails. It may have a little more time, a day or two, but we think it's going to roll over. And we think that we're going to get below this 94 number or worse within that next 3 to 8 days. So it's in this coming week or the following week that points out to. You can see the date right over here is the 26th of September where that next low is due. And you could see this beautiful rhythmic action in here and turning down. Yes, you can see how head and shoulders top forms right in there. You're looking at a classic head and shoulders top right there. So let's do the analysis. You can see the neckline right here, and I'm just going to bring that right across. There's your neckline approximately. Now I'm going to bring it up to the head. And so the distance from the head to the neckline when it breaks down is where you get your measuring point from. So you have these parallel lines. I'm going to move this down, and you can see that that points down to 92 if you get this breakdown in the dollar. That's a bad scenario, and this is one of the reasons I start out the show talking about that money flowing out of U.S. markets. If we're going to get this weak dollar that I expect, well, this is an image of that weak dollar that I expect. We're going to call it this week moving down and getting below that 94 number within the next 3 to 8 days. Next thing we're going to look at is /GC, which is the gold market. Now, we expect that gold is going to do a little bit better. Now, it's been trapped in here. You can see the momentum still negative. It's been negative for all of this time. You can see all the way back here. I'm going way back to April, where it turned negative right there and continued negative during this whole time period. So this is almost 5 months of negative momentum, and you still have that, and that's why the resistance areas are holding it. You can see up here, each one of these resistance areas stopping the upside move. Now the support area is holding it, and that's kind of the first time it's done that. We see another potential week or so of choppiness here, but then turning to the upside. And here's that window of time in the fall that we're talking about where we think the metals can do better. And at any time, this could turn up. I think really the risk is to the upside in here. We're not looking for massive gains. We're looking for 1240, 1260 on the upside. It's still a good gain and very tradable, and we think that it is going to start very soon. For the coming week, we're just going to call a choppy weekend here with, staying between this support and resistance in the narrow range, 1194, 1223 for now, but the risks really that it's going to break out to the upside in there. And momentum improving. See this little blue arrow right over there? After all of this time, 4 months on the downside, that little blue arrow shows up, which tells you that the momentum has turned neutral. That's the first time and the first sign in all of this time period that gold is getting better. /ZB is the next thing we're going to look at, and that is the 30-year bond market. We, thought that it would rally and then come down in here. If you look here, you got basically very little uptick right in here, and then move sharply to the downside, down about 3/4 of a point for the week. I guess it's not a nightmare, but again, this is not looking like it's ready to bottom yet. We're going to call more choppiness to the downside. We get a little rally in here. It's likely to fail and roll over. 141 is a likely area of test on the downside. It's 3/4 of a point. It's not that much of a move in here, and we think that's likely over the next week. We're going to call it a minor down week, and then I think below this 41 area in the next week, I think it's buyable over there. The question is, this low right over here is where the TLT lines up for a significant bottom. The 30 years do not line up for a bottom until sometime in October. So this yield curve might be playing some games in here. We'll have to see. In the meantime, near 41, just below there in the next week, we think it's a buy. We're going to call for a choppy, small down week in the bond market. And of course, we're going to look at the stock market. Like I said, stock market we thought was going to dip and then rally. We thought it would get down to a support level around 28.45 and then rally back, and it would be just a small down week. Well, it didn't give that downside, and then when the rally came, it came with more strength on the upside, more upside magnitude than we had expected, and a much better week for the stock market. And I cleaned this up a little bit, so our members will see that I made just a few little changes in here from when they got that last set of charts from us. And you'll see that on the bottom is a green cycle bracket, and the actual way that cycle bracket traded is in green up on the top of the chart. And you will see the blue one, which is the one it was the dominant pattern it was following before, and then the blue pattern on the top of the chart. These are out of phase cycles, as you can see our note right in here. The green one is the one that our analyst RV has been looking at as dominance, and the blue one is the one I've been looking at as dominance. And RV's cycle is the one it's following perfectly. You can see that in here, as it's due to make a peak and turn to the downside in the next few days. Now, the blue cycle I'm looking at looks like that's going to make a peak a little sooner and then turn down also. We're in a week where both of these are, even though out of phase, are both pointing to a peak, and we think that the risks have been increasing during this period. We're below this 29.16 peak we made 3 weeks ago, and now we think we're about to start to make some room and move to the downside in there. So we're going to look for this week to pull down. First support is the bottom of the slim ribbon. That's about 28.80 that you can see right there. That's important that you have slim ribbons on your charts, I believe, because you could see this upward momentum and that center line, the 13-day exponential moving average. That really is a key to what the momentum looks like, and momentum's still strong in here. This one looks to us like this coming week is going to be down. Like it'll try a little bit more in here, and then all of a sudden between the green cycle and the blue cycle, they're both going to start pushing to the downside. We're going to look for that 28.80 number, and then the next number is the center of this is around 28.60, 28.65. That's the range and the downside that we're looking at for now. And then probably if that happens, we get a bounce, and then the risks really increase as we get into late September through November, early December. That's when we think that there is the potential for much more downside. So end of the month, much more risk, upward momentum that you can see in here, keeping the market from giving a lot of ground on the downside. So we think that the buoyancy that you see in the markets are likely to continue. That is the short-term view for the coming week. I hope there's been great information throughout this show for you. Make sure that you either write support at askSlim.com or slim at askSlim.com, either one, and ask for the special link for level 2, $18.50 for all of those 300 plus videos, and you continue to get 3 new videos every single week, and that's how we keep it going, by your memberships, by your support. And please do. I want you to be so careful. It is so crazy out there, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been